All right, what's up, guys? Today I'm basically be going over liquidity, and everything about liquidity is just literally just your highs and your lows, right? And to understand like how we use liquidity, it's just because that's where price wants to go to. Price liquidity is just a point of interest, right? And when we take highs, we insert the new highs, then target lows, insert the new lows, then target highs. And that's one thing you have to keep in mind because that's how price moves, right? And then price retraces to fair value gaps slash imbalances and targets liquidity, which are your highs and lows. So in this video, I'm just gonna show you guys where to actually find your liquidity, and then in the next couple of videos, it's gonna be actually how do we use liquidity to basically switch directions and like how to actually use those kind of like as targets, how to actually determine like a continuation to go higher, and then we start falling off, right? All that shit, all like that fun stuff, right? But this is just to actually kind of like show you guys where liquidity is. And again, I'll just kind of draw it out real quick. So obviously we see a chart right here, right? Um, just kind of do something like that, right? So right here we have this high that was inserted here. This is your sell side liquid, I mean your buy side liquidity, and then we have this low that was inserted. This is your sell side liquidity, right? This again is also your sell side liquidity. And then when we take a low, right, like right here, we have like these or this previous low and then this previous high, that is considered a liquidity sweep. And then this is also considered a liquidity sweep. Then same thing right here, liquidity sweep. Then we can see, oops, we came, took this high, inserted that new high, targeted these lows, inserted the new low, and now we're trying to target highs, right? So that's basically like the whole point of it, right? Like for example, right here, we could kind of see that in this example, right? We inserted this high. Well, before like market had all this, right? We actually kind of took this high. Well, came up, targeted this high, inserted that little tiny high, right? Or kind of created like equal highs, and then what do we do? Target these lows. How do we know that's going to be, or how do we know that this is going to be a liquidity sweep and this is actually going to target these lows? Just by looking at inversions, looking at fair value gaps, basically being inversed. And once you start getting like that confirmation of like, okay, like we start seeing market kind of like change direction, right? With these inverse fair value gaps, right? And then bearish fair value gap as well. Once you start seeing price actually like hold down these, then we're going to start like actually selling off, right? From here, we actually did have like that strong sell off there, right? And then we do what? Target the lows. Target lows, and then try targeting highs again. Obviously, right here, this would have been the high that we will want to be targeting, right? Because if we actually zoom in, we have, well, after we took this high right here, we swept that into this new high, right? And obviously, we have like these little like highs as well. So it draws on liquidity right here. Where if we actually take this high and see like us, if we see that we stay under this high, then we're obviously gonna keep going lower. But oh, let me remove this right here. This is all liquidity being swept. Same thing here, liquidity sweep. And just don't get like anything like confused. It's just literally sweeps. Just like we come down, just swept it. We just took it. We took the low. Then we do what? Insert a new low right here. And this is just how price actually kind of moves, right? And now we're seeing that what buy side is just basically the high that's keeping us underneath. Obviously, this high right here, like the top one up here, is the prominent high that's keeping this whole structure basically in place. Like this whole range. This high right here is the obvious high. The last high that was inserted that is actually keeping the whole structure basically under, right? And then if we actually kind of like see right here, we actually have like this low. This is a higher time frame low. How do I know it's a higher time frame low? Well, it's just kind of by like looking at it, right? We could see if you step back from your screen, right? If you step back from your screen, maybe walk like a couple feet, right? You could actually start seeing like lows like this, these big, huge lows, basically right here, right? Those are your higher time frame lows, right? And with those higher time frame lows, you're actually gonna start seeing like if you sweep a higher time frame low, get that higher time frame confirmation, you're actually gonna see a move back higher, right? So in this case right here, we are just kind of like underneath a dominant high, right? And if we stay underneath that dominant high, we're just basically playing shorts all the way down to like the next draw on liquidity, draw on liquidity. So sell side, we came back down, swept this, but this buy side right here is basically keeping us underneath. I'm gonna actually remove this shit because I don't know why I have that there. Come down, swipe this one, created equal lows. Another thing to also keep in mind is that equal lows and equal highs are a magnet for price. Keep that in mind as well. Because actually, when we took this high, we actually basically created equal highs. And then from here, we actually see buy side coming up, being swept. Pretty sweep, or just like, I'll just get rid of that in general, just because I wouldn't want to have like lines marked out. We see buy side being swept, right? And then why did we not turn around when we came to this high here? Why didn't we not go lower, right? Because we start looking at just like higher time frame confluences that are just holding us above, which in this case I'm pretty sure was just like a 4 hour. Yeah. We had this 4 hour fair value gap right here that was basically keeping us above. If we inverse this 4 hour, then what are we going to do? Target the lows right here, validating our liquidity sweep. But however, if we respect this 4 hour, right? We respect this 4 hour, then we're going to obviously target the buy side up here, right? And that's basically how you understand liquidity, right? Because again, we go back to what I just mentioned before, right? Price retraces into fair value gaps and targets liquidity. Right? What do we do here? Right? We came to this liquidity. We retrace into what? A fair value gap, which in this case was a 4 hour. We retrace into a 4 hour, right? And then what do? Target liquidity, which is again the buy side up here. After we take that buy side, where are we going to retrace to? Well, obviously we're gonna retrace into our fair value gaps, but depending how we react to these fair value gaps is how we're gonna continue, right? If we react to, let's just say, this bullish fair value gap, right? If we react to this like good, we're like, okay, we're supporting, right? We're seeing support, then we're gonna continue higher. We're gonna see the continuation to actually keep inserting newer highs, right? But as of right now, we just inserted this high right here, right? And then swept these highs right here. I'm gonna just get rid of that shit. But that's also like a thing to keep in mind because the reason why you're pushing higher or the reason why you're pushing lower is because it's always a higher time frame fair value gap or higher time frame low or a higher time frame high that's being inserted, right? The reason why we would sell off pretty hard is because we're going to insert that higher time frame low. Like right here, this is a higher time frame low, this is a higher time frame low, this is a higher time frame low, higher time frame low, higher time frame low, right? And then if we ever have like a harder sell off, it's just again another higher time frame low. Unless we're actually gonna be bearish, which we're gonna be able to tell just by breaking those lower lows, right? Or those higher lows. My bad. All right. But from there, we got the inversion of this fair value gap, basically confirming our liquidity sweep here, or just in general, this whole drawn liquidity being swept. Inverse fair value gap, right? And what are we gonna target? Lows. Target these lows. And then target all, well, we could target all these lows as well. The thing is, liquidity, again, it's everywhere, right? Like here, 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 like the bottom of these candles, right? Sometimes, again, if you go on the smaller time frames, you can actually see more, right? So actually see like more obvious lows. But again, on the higher time frame, we could actually see like the main one right there, and then two main ones right there. These could also be swept as well. These are basically called your internal liquidity. What an internal liquidity is just the inside lows, and external liquidity is just your outside lows. Where external, if you sweep an external liquidity, yes, you're gonna see that higher move up. If you sweep an internal liquidity, you're just gonna get like that inner day, like day trade, right? Which it's also fine. We actually day trade, right? Like right here, we actually swept this low, got like this little move up to the upside, right? But on this higher time frames, we're gonna end up trying to do what? Try taking out the higher time frame lows. Like right here, we took out this low, and then what do? We had this little move back up, right? Because right now it's just looking like a little tiny pullback into the discount, right? Because we really didn't, yeah. As of right now, we actually kind of like had that little tiny like um confirmation to the upside where we had all this shit, right? We had change in the state. This is looking kind of what I saw, right? We had this change in the state of delivery. We saw this inverse fair value gap here, the inverse, and we had this bullish fair value gap here. That again, um, was created. Bullish fair value gap, inverse fair value gap. All right, got a confirmation. Basically, okay, we're gonna go to the upside, but we were running up pretty hard, right? So what does price want to do? Obviously, sell off a little bit, right, to continue higher. Right, so we drop back down to basically this entry, but I honestly took shorts this day just because we had like some SMT here, right? And then just like a lot of conferences basically saying, all right, like we're gonna short just today, right? Breaking these lows, having a SMT, pretty sure it was like somewhere right here, right? And then also saw that we were inside like a fair value gap right here. So as a day trader for me, I took this setup to the downside. And then, yeah, I remember this day vividly. This was low-key fire because I'm pretty sure this ended up being like a huge sell-off because price came down, inserted or not inserted, inversed all of these bullish setups, right? Or bullish fair value gaps, right? And then inverse or and created a bearish fair value gap, right? We were inside a 30-minute bearish fair value gap. Had an SMT. I'm not sure where it was. I think I have to go like on replay mode to figure that out. And if you guys understand what an SMT is, it's cool. But if you guys don't understand what it is, then it's fine. I'll explain that in the SMT video. But we had an SMT. Where was it? It was the right day, right? Right here. We're able to take these highs here, but we weren't able to take those same highs on NQ, giving me like, okay, I'm getting confirmation where it's like, okay, we're gonna sell off. We're gonna be like, okay, we're not gonna continue higher. We're probably gonna push down a little bit lower to continue higher because if price is going like this, we're like, again, the SMT is just like a confirmation where it's just like, okay, one is selling off. My mic disconnected, but one indice is selling off or one stock is selling off. Again, if you guys don't understand this, then again in the next video you guys are gonna understand what a SMT is. But what a SMT is just when like, okay, we're starting to see sell off on one asset or one stock and the other stock is actually moving up, right? In this example, we started actually seeing like a sell off um well, obviously on both assets, right? But we started seeing that NQ wasn't able to reach higher, right? So we actually kind of started seeing this sell off on NQ, right? Where ES was gonna follow through eventually, right? Let's actually kind of go into just here, and then from here we got the inverse of the fair value gap right there. And for this to be a valid trade, you could take two entries on this. It would be like the inverse, like the second inverses, you could take an entry. But the thing is, since we're playing options, your risk to reward will honestly pretty be shit, right? So what do you want to do? Just wait for a retrace back inside, and that will give you a better risk to reward. And then yeah, Damn, holy fuck, that shit fucking sold off hard. But yeah, we were able to take this shit all the way to this low right here, right? And then for price to actually continue lower, we want to see obviously all these fair value gaps basically be respected. So this big ass 5 minute would have been respected to obviously continue lower. This video was supposed to be a to actually how to find buy side and sell side liquidity, but again, this is also to actually figure out like confirmation how price wants to go, where it wants to go, right? So if you guys don't understand this, this is again just a sneak peek how to actually get into the strategy on how like I trade, right? You don't gotta understand all this right now in this one video. What I just said in the beginning is just all you really need to understand, right? How price wants to move because we actually came down, swept the low here, right? Swept the low here, swept the low here, right? And then we saw that as of right now, this is the low that's now keeping us above, right? We swept these lows right here, liquidity sweep. And why did price not want to go lower? Again, because if we go on the higher time frame, we're inserting higher time frame lows, like right here. This was just a higher time frame low that we are actually inserting, where like right here we were actually inserting a higher time frame low. Pretty sure this was daily. Nah, more like the 4 hour. But yeah, we were just entering that higher time frame low, and after we take the external liquidity, right, find the support basically supporting us, and just new support basically overall develop, market structure shift, inverse fair value gaps. What are we gonna get? We're gonna get, bro, basically this move to the upside. Why is this not nice? My replay mode is low-key being fucked right now, but yeah, you can start seeing that once we swept this low, where we're gonna target the highs. It's a bunch of lines. You guys, it's fine if you guys don't understand this as of right now. But yeah, we're slowly gonna eventually go back to those highs. And then, yeah, price retraces into imbalances. Then targets what? Liquidity. Then how do we tell if we're gonna turn around? Just by inversing those fair value gaps, getting a break of the trend, start seeing weakness in the trend, and then just go lower, right? As of right now, from here, we just kind of like see all like that whole thing basically develop. We have a high here, insert that little high right here, sell off, right? Take these lows, come back up, target these highs, and then after that, we took these highs. After taking these highs, we come back down, target lows. After targeting lows, we come back up, inserting highs.